How do you get a loan to flip a house? By the end of this video, you're gonna know exactly how to get a loan for your flip, even if you're brand new, don't have perfect credit, or you've never done a flip before. When I flipped my first house, I didn't have a high W-2 income, or any W-2 income, didn't have great credit, I was pretty maxed out, I didn't have much money in the bank, but I still got funded. So most banks won't loan on a flip, but there are institutions that will loan to you. You just have to know where to look. If the idea of getting a loan sounds overwhelming, don't worry. In this video, I'm gonna walk you through exactly how it works. So here's why banks don't work. You know, banks will loan you on the purchase price of the house, but truthfully, banks don't like vacant houses and they don't like flips. But if they did choose to loan you money, they're gonna want 20% down on that flip, but they won't give you any money for the rehab cost. And as a flipper, you need money for both, don't you? Now, you might have the clever idea of saying, hey, I'll just tell the bank I'm gonna own or occupy. I'd be very careful of that because you can get in deep trouble if they find out later on you flipped the house and did not own or occupy it. If a bank does choose to loan you money, they have a cap on how money you can borrow in your personal name, usually 10. And you might say to yourself, Glenn, 10's a lot. Well, it might not start out as 10, but if you're doing your business correctly, you'll get there. So you want to prepare in advance. We actually used a bank for our first 2 flips back in 2007. If you recall, in 2008, all the banks pulled funding for any real estate deals. So we suddenly lost our funding and we had to find alternative ways to fund our deals. So you're saying, okay, Glenn, so banks don't work. So what kind of funding can I use? Well, you can use private lenders, we'll talk about. You can use hard money lenders, or you can use many creative financing options that you probably aren't even aware of. Let's first talk about hard money. Hard money is not Guido the killer pimp that lives down in the street corner loaning you money. Maybe it used to be, but that's not what it is now. It's an organization of people that get together that are prepared to loan you money at a higher interest rate because they're taking more of a risk on these types of properties. But they're very available in today's market. So borrowing from a hard money lender requires that you have at least a decent credit score. You know, I'd say around 500 or higher is you can actually borrow money. The lower your credit score, the higher the rate, because the more risk it is for the hard money lender. They're gonna wanna see what's called comps or the comparable sales, and they're gonna wanna see your exit strategy. Now, make no mistake, they're gonna run their own underwriting as well, but it's important that you show up knowing that you actually know what you're talking about. They're gonna wanna see tax returns. They're gonna wanna see proof of any assets that you own. They're gonna wanna see any prior deals that you've done or any current properties that you do own. A hard money lender usually is gonna require a personal guarantee on that loan, but they're short-term loans that last typically 6 to 12 months. The interest rates might be higher, anywhere from 9%, could be as high as 15%, and they could have points involved as well. But I always say, it's more important to focus on the profit you make on the deal instead of on the cost for the money. Because if you don't take the money, somebody else is going to go do that deal. Now let's talk about my favorite way to fund a deal, private lenders. I mentioned before that in 2008, the banks yanked financing away from us. So we literally had to find a way to do it. So we were able to secure a private lender for our deals. A private lender is usually someone that you know that has a little bit of money set aside. They may have it in a 401k, they may have it in an IRA, they may just have it in the bank, or they may have a line of credit against a house or some type of an asset. They can loan you money to do your deal. Here's why it's so great to use a private lender. Number one, there's no credit check. They just loan you money on that property. Now you're gonna give them a mortgage, you're gonna give them insurance, you're gonna give all that types of proof so they are protected, but not being savvy investors, they're not gonna ask a lot of questions on the deal. And here's a really simple overview on how you can get a private lender. Put together a nice packet just showing exactly who you are, what your goal is, and what you plan to do. I recommend that you have an actual deal to present to them as well, and then send that packet to them and say, here's what I'm looking to do with this house. When I sell the house, I'm willing to pay you your money back plus interest. It'll be around 10 to 12% in the current market, and show them what's in it for them. Odds are, once you get that investor across the finish line, they get a really high return, they're gonna invest with you for many, many years. Amber and I have raised over $5 million in private lender funds. We started this almost 20 years ago, and many of those original investors are still with us to this day. In my opinion, it's the best way to fund your real estate deals and have an unlimited supply of capital. All right, lastly, I want to talk about creative financing. These are ways to fund a deal that you probably aren't even aware of or haven't even thought of. And I have a ton of videos on our channel that goes over a lot of different ways you can do this, but today I want to talk about one specifically, and one that I call seller financing. Imagine for a second that you stumble onto a seller who says, look I want to get $200,000 for my house. You look at the numbers and you say, I can give you $200,000, but Mr. Seller, could I give it to you in 6 months? Say what? Say, what I want to do is I want to come in here, you keep the house in your name, I want to come in and do the renovations, fix it up, get it cleaned up. I'm going to put it on the market and sell it. I'll give you your $200,000 once I renovate and sell this house. And that should take about 6 months of time to do that. Would you be open to that? Now, not every single seller is going to want to do that, but if 1 in 10 says yes, is that a good deal? Because you know what you just did? You created a 0% loan for yourself. Don't miss the beauty of creative financing. And people say, well, what are the terms? They're whatever you and the seller agree to. There's many other ways to use creative financing to get a deal across the finish line. And the bottom line is you want to get those first few deals across the finish line because number one, that builds experience, it builds credibility, it builds confidence. So when you start building your business and talking to other private lenders, now you have deals you can show them that you have success behind you. And success always breeds more success. Also, once you have those first deals done, magic starts to happen. I mentioned before the first deal we ever did was one of Amber's friends she had at the gym. We went to her and said, look, we need to borrow $100,000. And she didn't have the money, but she had available credit on her HELOC or her home equity line of credit. And she said, boy, I wish I could invest with you. And I said, I'll tell you what, don't you have a beautiful home? She says, yeah, I do. I said, do you have a line of credit? She said, I do. I said, could you loan us the $100,000? I'll make your minimum payments for you. And then when I'm done, I'll give you the money back. So she actually used other people's money. So she used a bank loan, right, HELOC, to give us money to do our very first flip. Because we did that structure, when I started looking for more money, the very next investor that I ever found, who I still have to this day, transferred over $400,000 to us to invest in future deals. When we started, you know what he asked me? He said, hey, Glenn, do you have anybody I can talk to that's had success with you? And because I had that first creative deal, I had somebody he could talk to, and that gave him instant credibility. That $400,000 is now worth well over $1 million, and his retirement is secure with our company. Just get started. Whatever it takes, just get started, because the more success you build, the more success you'll have. So here's the thing. Lenders will only give you money if you know your numbers, and they have to make sense. Go watch our video, How to Evaluate a Flip Deal Like a Pro, where I'll show you exactly how to evaluate the deal so you can present the deal with confidence, know what to pay, and protect your profit on every flip. The video link is in the description below.